Did you know someone paid over $69 million for a JPEG? Welcome to the strange and fascinating world of NFTs, where digital art, music, and even tweets can sell for more than houses, and where the lines between ownership, creativity, and technology are being redrawn every day. NFTs, or non-fungible tokens, have become one of the most talked about digital assets in the world. But what exactly are they? Are NFTs a revolutionary technology poised to reshape how we think about ownership and value in the digital age? Or just the latest internet hype destined to fade away with last year's memes? Today, we'll break down what NFTs are, why they matter, and what the future might hold for this wild and unpredictable new frontier. When NFTs exploded in popularity in 2021, headlines were everywhere. Digital artists becoming millionaires overnight, pixelated images selling for 6 or even 7 figures, and a rush of celebrities buying, selling, and even creating NFTs of their own. But beneath the surface of this digital gold rush lies a world swirling with confusion, volatility, and even outright scams. Many people still don't really understand what NFTs are, why they have value, or how the technology works. For every story of an artist cashing in, there's another about someone losing their savings in a market downturn or falling victim to a scam. The NFT space is filled with promise, but also with pitfalls for the unwary. To understand NFTs, we need to look back at where they came from. The story begins in the world of blockchain technology, the same digital ledger that powers cryptocurrencies like Bitcoin and Ethereum. In 2017, a quirky project called CryptoKitties captured the internet's attention. CryptoKitties let users buy, sell, and breed unique digital cats on the Ethereum blockchain, each one represented by a non-fungible token, a digital certificate of ownership that can't be duplicated or replaced. While CryptoKitties was often dismissed as a novelty, it showed the world that you could own something truly unique and provably scarce in the digital realm. Fast forward to 2021, and the NFT scene exploded. The artist Beeple, known in real life as Mike Winkleman, sold a digital collage titled "Every Day's the First 5,000 Days at Christie's Auction House" for more than $69 million. Suddenly, NFTs weren't just a curiosity. They were front-page news, and the art world, financial markets, and tech communities all took notice. But how do NFTs actually work? At their core, NFTs are unique digital identifiers stored on a blockchain. Unlike cryptocurrencies such as Bitcoin or Ethereum, which are fungible, meaning each unit is identical and interchangeable, NFTs are one of a kind. Each NFT contains metadata and a digital signature that proves its authenticity and ownership history. This makes them ideal for representing anything that's unique: a work of art, a music track, a video clip, or even virtual real estate in online worlds. The technology behind NFTs has led to a wide range of use cases. Digital artists can sell their work directly to collectors, keeping a record of ownership and even earning royalties whenever their art is resold. Musicians can release albums as NFTs, giving fans exclusive access to new tracks or behind-the-scenes content. In the gaming world, NFTs can represent rare items, skins, or even characters that players can truly own and trade. Beyond art and entertainment, NFTs have been used for real estate deeds, digital collectibles, and even blockchain-based domain names. What makes NFTs so valuable, at least in theory, is scarcity. Because each NFT is unique, creators and sellers can set limits on how many copies exist. Combine this with speculation, and you have a recipe for sky-high prices. Many buyers hope to find the next big thing and cash out at a profit, fueling a dynamic and sometimes volatile market. There are clear advantages to NFTs. For creators, NFTs offer a new way to monetize their work, bypassing traditional gatekeepers like galleries and record labels. The blockchain guarantees verifiable ownership and authenticity, helping to combat theft and forgery. NFTs also open doors to innovative new business models, such as programmable royalties, where artists automatically receive a share of every resale. But the NFT world has its downsides. The process of minting and trading NFTs can be energy-intensive, raising concerns about their environmental impact, especially when built on blockchains that use proof-of-work consensus mechanisms. The market is also a breeding ground for manipulation and scams. Some projects have been accused of pump-and-dump tactics, where prices are artificially inflated before the creators abandon the project. And with regulations still unclear in many countries, buyers and sellers are often left unprotected. The most dramatic moment in NFT history, the climax that put NFTs on the map, came in March 2021, when Beeple's digital artwork sold at Christie's for over $69 million. This was more than just a record-breaking auction. It was a watershed moment that forced the world to reckon with the idea that digital art could be just as valuable, if not more so, than physical masterpieces. Suddenly, mainstream investors, celebrities, and major brands were all racing to get involved, and the NFT market saw a tidal wave of new interest and money. But with that attention came darker stories, too. Take the Evolved Apes rug pull, where thousands of investors poured money into a project promising a video game and a vibrant community, only to see the anonymous creator vanish with nearly $3 million in funds. The project evaporated overnight, leaving buyers with nothing but worthless digital images. These incidents highlight the fundamental risks of a market still in its infancy, one where innovation coexists with speculation and fraud. NFTs are more than just a buzzword or a passing trend. They represent a fundamental shift in how we own, trade, and interact with digital assets. For the first time, verifiable ownership of digital objects is possible, opening up new possibilities for creators, collectors, and entrepreneurs. But like any nascent innovation, the NFT space is fraught with hype, risk, and growing pains. The technology is evolving, and so are the rules of the game. The real question isn't whether NFTs will be valuable, but how they'll be used, regulated, and integrated into our digital lives over the long term. If you've ever bought or sold an NFT, or even just thought about it, share your story in the comments below. And don't forget to subscribe for more smart takes on crypto, tech, and digital finance.